Hey guys, what is up? It's Dusty here and welcome back to another episode of the Daily Crypto News. And let me just tell you that next week is going to be an extremely important week. Taking a look at Zero Hedge, he said, next week is one of the record book. We have not seen these three major central bank decisions, the Fed, BOE, and ECB, and key data releases, US ISM, payrolls, and the employment cost index, as well as the euro area inflation, GDP, and the confidence data in the same week before. This was said by the Bank of America, and indeed it's something that's never happened and is something everybody should watch out for. Again, I'm not saying watch out for in a sense of you should be afraid, I'm saying you should be careful because times are volatile. You might be wondering, Dusty, why are you wearing a bathrobe here? What's going on? You lost your mind? No, I just wanted to show it off. I just got it from Binance. I thought it looked pretty cool, so yeah. Anyway, to get back to it, this will be a make or break it moment for the markets. So be cautious and watch out. The rumbling is starting. In terms of what's going on with Bitcoin, it's rather interesting and fascinating to watch it. I mean, literally right now, Bitcoin is just retesting some of the previous levels that we've already seen. And it's so peculiar to see that these altcoins, like for example, Ethereum here is kind of not following along with that. We can kind of see that for Ethereum, indeed, there's been a rebound today, but in general, Ethereum is not as high as it was a couple days before. And for Bitcoin, we're basically breaking those heights, which we've recently seen. And I think it's all because of this major resistance that lies ahead for Ethereum that's not there for Bitcoin. On the opposite end, I'm also thinking, well, it's just trying to get that dominance back that we've been screaming about for a little while. Anyway, in terms of news, there's quite a lot of interesting stuff that's happened. We've had Elon Musk basically reaffirm that if Dogecoin were to be accepted by McDonald's, that he'd go on live television and actually get himself a Happy Meal. Now, from a marketing perspective, for both of these, it would be amazing. Obviously, it would be kind of difficult for a McDonald's to accept Dogecoin in the store itself. The reason I'm saying that is because there needs to be some sort of change in infrastructure. Or they just need to partner up with one specific company that can just allow them to accept it only for online orders. It shouldn't be too difficult. But in terms of marketing ROI, I think that would be insane for, building that gateway to get the richest man on earth to be happy with your Happy Meal and paying for it himself. I don't think there really exists better marketing than that, to be honest. Anyway, regarding the Ripple versus SEC lawsuit, there's really not that much to cover anymore as we're just waiting for the judge to make a verdict. John Dean, however, does not sit still. Ripple Pro lawyer John Deaton's crypto prediction sparks concern. Now, the founder, John Deaton of Crypto Law, believes that the final and most aggressive push to shut down crypto might soon be witnessed in the wake of the White House's statement on mitigating risks associated with crypto. Quote, "We will soon witness the final and most aggressive push to shut down crypto," Deaton wrote. And yeah. According to this published statement from the White House, the administration's roadmap to mitigate crypto risks reads this: "We have spent the past year identifying the risks of cryptocurrencies and acting to mitigate them using the authorities that the executive branch has." The legislative guidance provided by the administration called on the U.S. Congress to step up its efforts. For example, Congress should expand regulators' power to prevent misuses of customers' assets, which hurt investors and distort prices. And to mitigate conflicts of interest, the document further stated, obviously, this wouldn't be a finished little product if it was not for the SEC to step on in and kind of say, hey, we want some more power in this. As I meant to say ever so politely, the SEC is still attempting to broaden its claim of authority in the crypto market, regardless of what happens in other parts of the US government, I can call it. Anyway, to me, it's just mostly peculiar how they claim to really want this oversight over all that's crypto, right? But then when it comes to things like, for example, the FTX debacle and things of that nature, they kind of want to disassociate themselves and not take the majority of the responsibility for not seeing it through earlier. And that's where I kind of draw the line in saying either you're everything or you're nothing. In this case here, you can't only want the good/easy pieces and just skip all the rest whenever it conveniences you. And what I was showcasing here, by the way, was a little statement by Brad Garlinghouse that was talking about how he is very long-term bullish on crypto. That's about it from this part. He also hinted on the FTX and whatnot, but I think it's from like a couple days ago already, this whatever they're quoting right here. Even though it was only shared today, I believe it was a little bit older already. Alright guys, but before we move on, let's quickly take a look at this. I just wanted to bring to you guys' attention something that's been in my eyesight for a little while. I've been keeping my eyes on this project for a little while. Now, the name of it is CVI, aka Crypto Volatility Index, and as you can read right here from their Twitter, they're a market fear index for the crypto space, a new DeFi primitive created by Coti. Now, for all of you guys that do not know Coti, I think we'll be covering them more in the near future, as they're doing a lot of interesting stuff, mostly regarding the stablecoin. And one of the most interesting ones that you guys might know is JED from Cardano. You know, the massive Cardano stablecoin everybody's talking about. Yeah, that's in partnership with Coti. And once I noticed that these guys are not just sitting on their asses working on stablecoins, but actually broadening out to different things, it got on my radar. Now, I should quickly give you guys an introduction as to what it is. CVI, aka the Crypto Volatility Index, is a decentralized VIX for crypto that allows users to hedge themselves against market volatility and impermanent loss. So this is specifically something for people that are in the DeFi space, but it's really quite interesting. So with this in mind, this is what they write. Active traders, hedge fund managers, etc. now require tools to track the volatility of the crypto market. Hence, we can see the need for a new decentralized volatility index that provides a proper estimation of the risk measurement of the cryptocurrency components and a delivery of market status information to potential investors. Hence, the product was built. The crypto market needs a volatility index that is decentralized and dynamic, unbiased, and not connected to any exchange. Today we announce exactly that, CVI, a revolutionary and first of its kind decentralized VIX for the crypto market so that traders can hedge themselves against volatility or the lack thereof. So really interesting concept. Now, it's not just one indicator or anything like that. I thought they were way less far in their development because it's kind of strange to me that I only noticed it existed so late. But yeah, they're a full-scale decentralized platform that brings the sophisticated and very popular market fear index that I try to post almost every day on Twitter to the crypto market, and is created by computing a decentralized volatility index from cryptocurrency option prices, together with analyzing the market's expectation of future volatility. We believe that CVI provides the most reliable DeFi tool suitable for analyzing volatility, hedging portfolios, and earning from being a liquidity provider. By the way, if you're wondering what website I'm on the documentation, aka the wiki, because most of the time, you know, I sit here and I research, I'd say, crypto for about 3 hours a day or so, just looking into new projects and kind of seeing the baseline of what they do. And just to say, today I decided to share a little bit more about what I usually check out and what type of interesting projects are actually out there that you guys might never really come across if you don't dive a little bit deeper. Again, a lot of these major brands, in this case you're like Coti, or sometimes like Coinbase, or sometimes like Binance, whatever, they're building these massive structures, but it's not fully public, or even if it is, it's not that well known until sometimes you are too late. In this case here, I'm not talking about that, about being too late or anything like that. I'm just talking about, hey, take a look at what's actually already being built in the crypto space, take a look at where we are, and understand the potential of this technology and where it can go. So yeah, what does it take for CVI to be popular and widely adopted? There should be an instrument system, allowing traders to easily open positions against the index and trade it. Therefore, as part of the CVI launch, Coti will also introduce an innovative and full-scale decentralized ecosystem that includes the CVI platform, automated market maker, volatility tokens, Theta Vault, and Govi token. I'm not going to bore you guys with the explanation of the Theta Vault today. Reading an article about it, I actually forgot to mention one thing. Some of you guys might not know what VIX is. It's the S&P 500 Volatility Index. And again, in easy words, a real-time market index representing the market's expectations for volatility over the coming 30 days. And also one part I did not know before is that it was built in collaboration with Professor Dan Gelai, who is also the creator of VIX and part of the CVI Board of Advisors. So how it works in terms of actually trading it, we have only a couple of options as of this point. I'm not sure if this is all, but that's what it said. And this is a while ago though. USDC, Ethereum, and Coti for, you know, taking positions on the platform, basically following the volatility. You can also provide liquidity on the platform, and they also have their own little Govi government token. governance token, I should say, which you get for providing liquidity. And apparently holding this token also allows the holder to collect platform fees by staking them. So potential little incentive. This is very normal though. Apparently there was an airdrop of this token a while back to COTI holders. But yeah, I think that's good enough for an introduction for you guys for now. Just a really interesting project. Take a look for yourself. And just again, take a second or let's say, if you have it spare, take another 15 minutes, take another 20 minutes a day to kind of see what this crypto space is really all about. Again, I can't stress enough that within a couple of years, the people that are joining are not early anymore, but as of this point, you still are. The fact that these things are still being built right as we speak is just sometimes mind-blowing, mesmerizing. And that's why I want to share with you guys whenever I find some cool stuff, even though not only talking about making money off of things, also just talking about how things are being developed from the ground up and how we're getting closer and closer to this main adoption that we've already seen with the stock market. Anyway, all right, and now getting back to it. Regarding Cardano, because we're in that little ballpark here, Cardano is actually doing extremely good. Things are moving quickly, tons of dApps are coming online, and honestly, I'll give you guys a broader video on Cardano relatively soon, as honestly guys, it is pretty wild how they're moving and how they're coming along, and especially when you just take a look at all the feedback that they've been getting, a lot of it has been quite negative, right? I mean, if you've been in the Cardano ecosystem for a while, you'd know that even though they're working on great things and doing a lot of peer research, they're doing pretty well, there's always this cynicism or this joking underlying little narrative that people have, and they seem to want to have against Cardano for taking a slow approach to things and not having the majority of the adoption just quite yet. And all I can say about it is, I think it just will take a little bit of extra time, a little bit of extra effort, but in due course, Cardano will find its path and things are coming along. And a lot of the fundamentals are being built right now that needed to come into play. So it's exciting to see things moving so quickly in the Cardano ecosystem, which again is quick for them, slow for the majority of other ecosystems, I'd say. Sidechains are coming along, including Cosmos. Jet is launching soon, which again, we're going to be talking about shortly. Hydra and Mithril on schedule. Lace almost out of beta. Tons of dApps coming online, Hoskinson wrote. Quote, it's exciting to see things moving so quickly in the Cardano ecosystem. Sidechains are coming along, including Cosmos. Jet is launching soon. Hydra and Mithril on schedule. Lace almost out of beta. And tons of dApps coming online soon. Yeah, I'm not sure why they stated it twice, but it's just an exciting, I guess, wall of developments that are coming out and just things that are changing for Cardano. And again, as it says at the bottom here, as reported earlier, Cardano's over-collateralized stablecoin, JED, developed in collaboration with the COTI network, is expected to launch next week. Again, things are getting very interesting, very interesting. All right, guys, so that was it for today's video. Hopefully you guys all enjoyed it. If you did, make sure you press the like button and subscribe to the channel. And yeah, hopefully I'll see you guys again in another crypto video tomorrow. Who knows though?